The problem is the debt. It's not the ceiling. In fact, the ceiling is actually part of the solution. The problem is they keep raising the ceiling every time we approach it or hit it, as opposed to doing something to stay within the ceiling. That was the whole purpose of the debt ceiling, which actually started back in 1917, coinciding with America's entry into the First World War and the fact that we were borrowing a lot of money. And so Congress wanted to put some kind of cap on how much money the government could borrow. And the problem is, we keep raising the ceiling. And so it's not really achieving its intended purpose, which was to put some limit on how much debt we could accumulate. But every time we get to the ceiling, though, we just get all this political theater where the Republicans pretend they actually want to cut spending, but they don't actually propose any significant spending cuts. And of course, the Democrats don't want to cut any spending. Nobody wants to raise taxes, at least not on the middle class, which is where all the money is. And so the debt ceiling always gets raised. This is all political posturing. This is throwing meat to your base. But at the end of the day, the politicians will come together and once again do the wrong thing and raise the debt ceiling. In contrast to what they claim, this is not about paying our bills. If we were going to pay our bills, we would pay them and not raise the debt ceiling. This is about continuing to not pay our bills. Instead of paying our bills, we borrow the money. And we can't continue to avoid paying our bills unless we raise the debt ceiling. So that's what it's about. It's not about doing the responsible thing. It's about continuing to do the reckless and irresponsible thing.
Why is the $4,000 price point significant? According to market observers and gold enthusiasts, surpassing $4,000 could indicate a substantial shift in market sentiment. It might symbolize a lack of trust in the existing financial system and spark renewed interest in alternative wealth preservation methods. Considering inflation and currency devaluation is crucial. With central banks implementing unprecedented levels of money printing and stimulus measures, concerns about diminishing purchasing power are on the rise. As confidence in fiat currencies wanes, the appeal of gold as a reliable store of value becomes even more pronounced. Welcome back, everyone. In today's video, we're diving into an intriguing topic that has captured the attention of many investors and financial experts alike. We'll be discussing why some argue that gold needs to surge well beyond the $4,000 mark to potentially rebuild our economic system. So let's get started.
The reason we've got $32 trillion in debt is because we keep raising the debt ceiling.
Yeah.
And the Democrats now, since they're the ones that want a clean raise, and the Republicans are, pretending that they want to do something. But of course, they had a chance to do something when Trump was president, and they had the House and the Senate, and they just voted to raise the debt ceiling back then, when they actually could have maybe done something, and they didn't take advantage of the opportunity. So now it's all BS that they're, claiming they want to do something now, when they know they have a president of the opposite party. This is not the time. The time to do something was 4 years ago, and they did nothing. But the Democrats are saying, hey, if we don't raise this debt ceiling, it's a disaster. Interest rates are going to rise. Everybody's going to suffer. That is what's going to happen if we do raise the debt ceiling. See, all the bad things that they say are going to happen if we don't raise it are going to happen because we have been raising it. The fact that we keep raising the ceiling guarantees a debt crisis, because the only thing that's going to put a stop to the debt is a crisis. And so we've chosen to have a crisis on the market's terms instead of trying to manage something less horrific on our own terms. I don't think anyone's ever going to downgrade U.S. Treasury debt again, but if there was an honest rating on it, it would be junk, because there's no way that the U.S. government is going to repay its debts in real money, right? That's what counts. Sure, we can run the presses and give everybody a bunch of paper. But the question is, what will the money be worth when the bondholders receive it? Mm-hmm. And I think it'll be worth very little. I mean, inflation is just getting started. We have guaranteed that we're going to destroy the value of our currency because we refuse to rein in these debts. So our creditors may be paid, but it's going to be a hollow payment when there's very little they can actually buy with the money they get paid in. I think our leaders have to be willing to risk their own re-elections to do the right thing, because we really have to bring the budget into balance. And that would require a cut of about 30% from the government right now, this year, and every single year going forward.
Yeah.
And basically, though, if you look at where interest rates are and what the interest on the national debt is likely to be at the end of next year, we really need to cut government spending by about 50% in order to balance the budget. That shows you how out of whack it is and how far we're living beyond our means. Nobody is willing to cut the budget at all, let alone by 50%. So, there is no political way out of this. It's just not going to happen. So the reality is inflation is what's going to happen. Right? The money is going to lose a lot of value. The key is going to be to prevent hyperinflation. That's going to be the key, to prevent the dollar from losing all of its value. So people are going to lose the value of government benefits. So let's say you're getting Social Security. The real value of those benefits at a minimum is going to be cut in half. That's reality. But the worst case would be if the value of your Social Security benefits go down by 90% or 99%, right? Mm-hmm. So they're basically worthless because the currency is completely destroyed. So that's the outcome that we have to prevent. But I don't think there's any political chance that we're going to do the right thing. I mean, what I would do personally is I would give a big haircut to everybody, including the bondholders. I would not pay the treasuries off 100% on the dollar. We'd have to restructure because everybody has to participate in the pain, including people who bought U.S. treasuries. And if that means U.S. treasuries are downgraded, well, that's what it means. It doesn't matter because the government can't pay. Because if we're going to cut Social Security, if we're going to cut Medicare, if we're going to cut government pensions, if we're going to ask middle-class Americans to take a big haircut, we have to ask wealthy investors, especially who own U.S. treasuries, to take a haircut too. That's they took a risk. They loaned money to the U.S. government. The U.S. government was clearly bankrupt. They deserve what they get. I would like to see Social Security benefits eliminated or cut strategically. For example, I shouldn't get any Social Security. Right? Warren Buffett shouldn't get any Social Security, right? So there's some people that should lose 100% of their benefits, okay? And that would make it possible for other people to retain more of their benefits. It needs to be means tested based on assets, based on income. And I know a lot of people don't like that, but that's the reality. But I think going forward, we need to get rid of the program entirely. I mean, the government never should have gotten involved in this. It's unconstitutional. It's bad economics. It's an intergenerational Ponzi scheme. The government has no legal authority to be running it. So we need to get rid of Social Security and Medicare. I understand that, unfortunately, now you have a lot of Americans that completely depend on it, and that's unfortunate. Had it not been for government, had they not been taxed so much while they were working, they could have saved for their own retirement. But they didn't do that, and instead they've been betting on a government Ponzi scheme. And so I understand that there's going to be some people that unfortunately need to get this welfare, which is really what it is. Like, a lot of people think, well, I paid into Social Security. Nobody paid into anything. You just paid taxes, and the government spent the money. The government lied to everybody. Everybody was swindled by the government, So, people paid into Bernie Madoff. That didn't mean they were entitled to get their money back. So people who paid into Social Security are no more entitled than the people who paid into Bernie Madoff. They got conned. It's just that this time the con men were the U.S. government. But I get it. I want to try to figure out how to take care of the people who really need it. But for the future generations, we got to get rid of it completely. But, politicians don't want to talk about that. But what's going to end up happening, because we're not going to do it my way, because no politician has the guts to cut Social Security for anybody, even for Warren Buffett, right? We're going to wipe it out through inflation. And that means that the people who need Social Security are going to have the same reduction in their benefits as guys like Warren Buffett who don't need it at all. So the way it's going to end up being done is not going to be equitable at all. Everybody is going to suffer the same, whether you're a billionaire or you're barely making ends meet. I would rather it not happen that way, but unfortunately, that's the way it's going to go down. Whether we actually do that is another question. Because in order to rebuild, we need to have a free market, because the government's not going to rebuild anything. So if the government takes over the rebuilding, then we're going nowhere.
Right.
The only successful path is free market capitalism. So that means we have to acknowledge that the problems were caused by government. It's a tough pill to swallow, for our leaders. Now, obviously, we need all new leaders, but, I don't know, I want to be hopeful that when push comes to shove, in the middle of a crisis, we'll do the right thing. We certainly won't do the right thing to avoid the crisis. That's never going to happen. it's going to take a crisis to potentially cause the right thing to be done. So we'll have to see. We're going to have to take our chances. But the one thing I know is that my investment strategy is going to do extremely well. And so at the point this happens, I'll be a lot wealthier than I am today. I'll have a lot more money, and maybe I'll be in a better position to help, get the country to move in the right direction. And I may be willing to spend a considerable amount of that money to do that.
Okay.
Our concentration personally in gold and silver mining stocks. And a lot of these stocks, I think, are going to go up not only 10x, some of them 50 or 100x. And I have sizable positions in these stocks, 7-figure positions. So, you 50x those, right? I mean, that's, so I'm in a position, I think, to make a lot of money on this short dollar trade as it emerges. I think most people are on the wrong side of this trade. They just think the dollar is going to reign supreme indefinitely. They just don't see any viable challengers to the dollar's throne. And in a way, I agree. I don't think the euro or the yen or the RMB or the pound or any of these currencies is going to replace the dollar. I think gold is going to replace the dollar. I mean, the dollar replaced gold. We're just going to go back to the way it was. And in fact, the only reason that the dollar became the reserve currency was because it was not only backed by gold, but redeemable in gold. The dollar was as good as gold, right? Mm-hmm. And so, but for gold, the dollar wouldn't have been the reserve currency. And it was only the reserve currency also because we were the world's biggest creditor nation. We had the largest trade surpluses. Today, it's the opposite. World's biggest debtor nation. In fact, we owe more than all the other debtor nations of the world combined. Massive trade deficit, and the dollar's backed by nothing. And we keep on printing them. We have multi-trillion-dollar budget deficits as far as the eye can see, completely reckless and irresponsible politicians, no discipline whatsoever, massive inflation. There's no way that the dollar could qualify for the reserve currency. I mean, if it wasn't the reserve currency now, it never would qualify. But the weaponization of the dollar has now accelerated that trend, and it's over, right? It's already happening. It's just that so many people are still blind to what's obvious.
And that brings us to the end of our discussion today. Throughout this video, we explored the fragility of the current system, the role of gold as a safe haven asset, and the various factors that could drive its price higher. The $4,000 threshold represents more than just a numerical figure. It serves as a potential tipping point, signaling a significant shift in market sentiment and a loss of faith in the current financial system. As concerns about inflation, currency devaluation, and geopolitical tensions rise, the appeal of gold as a reliable store of value grows stronger. It's important to note that predicting precise price movements is challenging, and the future of gold remains uncertain. While some argue that gold reaching or surpassing $4,000 could pave the way for rebuilding the system, it's crucial to conduct thorough research and seek advice from financial experts before making any investment decisions. We hope this video has provided you with valuable insights into the case for gold and its potential to reach new heights. As always, stay informed, keep learning, and make wise financial decisions. Thank you for watching, and don't forget to like, share, and subscribe to our channel for more informative content.